So then we continue where we left. This is the dull line. Golfing, we looked at the dark cloud cover. That is, the dark cloud means that there is a cloud here covering. The dark is the downwards movement, and this one. So we move to the next. To the next, we are trying to check the bullish engulfing. The bullish engulfing. This is a weekly chart of the Kuwaiti stock. Okay, so we are checking at the bullish engulfing, which are seen here. This is one. Bullish engulfing shows a very strong movement. There is a very strong bullish candle. So you can see the bullish candle here. There is also another one here. After subsequent drop, there is a very strong bullish movement here. You know, the engulfing, which gave, in fact, this trade started from here. It started from here and it went up to here. So when we talk about bullish engulfing, we are referring to a very strong upward movement after a trade that and you can see that there is a gap here. There is a gap. There is also a gap here. So a strong bullish candle that is higher than the bearish. If you check very well that this candle began there. Let me use a smaller. This candle began at there. Then instead of going down, it came to here. Instead of this going down, it raised and beat this level. Okay, the same case applies to this. This one ended there. Instead of it going down, it came up and it beat this level. So you see, so when we have the second one, we can get in, and again we can get in at the first. So decision is yours. For me, I like waiting for the second candle. Okay, so we have this one is we are looking at the dark cloud cover. The dark cloud cover. The dark cloud cover is that the midpoint, the candle that beats the midpoint of the previous candle. This one, after the huge movement. You see the huge movement. Then we have there is movement, like in this case. This is the dark cloud cover at this point. You see, this candle has gone beyond the midpoint of the previous candle, forming a dark cloud, and then we can put a sell if this candle beats this low. This low, we can put a sell. Okay, so our sell position comes from that point. Okay, so we continue with our lesson. We have let me check another type. We have 3 line of the candle. We have the morning star, we have evening star, we have white soldier, and black crow. We have, you can see the morning star, this one, the 2 star, this one, the morning star, this one, sorry. So when we have the very big movement like this one, these pairs, they are like this, we trade at this point, place our buy at this point. Okay, if it is like this and we have the evening star, this one we place, and this one, so we place our sell at this point. Please don't use the midpoint to place your sell. We have the white soldiers, they are here going up, the three soldiers are following each other, and if you check this eye, this one is higher than this, is higher than this. Okay, so here this one is it's going up, this eye is higher than the previous, this is higher than the previous. Three white soldiers with the black rolls, if you check, this one is lower than this, the closing is lower than this one, they are going down, so we sell at this point or at this point. You can wait. The more you wait, the more you get your strategy is accurate. So this marks a down trade, this marks an up trade, this is a down trade with its a reversal, this is a reversal, upside reversal. Okay, so in our next part we are looking at optimizing and confirms price targets, how we can use this Western charting to optimize and confirm price targets. So here we will check at support and the resistance, trend lines, price patterns, moving averages, oscillators, Elliott wave. These are strategies. These are strategies that we have covered already. So if you want to check more about these strategies, you can still refer to our previous video, but we will look at them based on the candlesticks. You understand? Okay, thank you. We meet next. Okay. Yes, so see you. Let us continue. We are continuing. Click next. We move on. Okay, just that I do not want to have a long part, so we continue. Thank you.